we're just going to be like,
ladies and
man,
gentlemen, I accidentally pressed the I pressed the live button.
Speaking of lateness, ladies and gentlemen.
Yeah. We are here. Sorry, we were just waiting on Tevis. He needed to get settled. But how's everybody doing?
Liar. You're such a liar.
All right. I mean, that's how I recall it, honestly. You know, we were just waiting.
Oh my gosh. Okay.
I like to have fun with the settings. Ladies and gentlemen, Sofi. This week's been a good week. I mean, we got some exciting news. Galileo's back in the picture. Earnings are coming up. Things are starting to sort of heat up, right? How have you guys been doing? Have you purchased any shares of Sofi? Or are you buying something else? What are you guys doing?
Nothing. I ended up, the only thing that I did this week was I had some covered calls that I'd sold on Palantir for 35 strike in June. I know it's not Palantir Weekly, but no, I sold those for like $90 a pop, and I bought them back for 15, 16. So yeah, it was time to cover. You know, don't have to wait all the way for those to the end. But yeah, I don't have a lot of money coming in right now. It's cash, and I'm fully invested except for like maybe 1% of my assets. So I'm just waiting.
I just am reading something that Lisa said. She said it was nice that Steve was on a Mitts channel today. Is that true? Did you guys see this? If so, we have some beef.
Yeah.
No one will believe us, but Steve was literally chatting with us behind the scenes like a minute ago. Yes, he was. They're saying.
Really?
Dude, okay. I'm sending him an invite. You better come back, Steve. He's probably watching right now. Steve, you better come back.
I'm sorry Tevis was rude to you. You know, come back.
His lateness was kind of tardy.
All right.
But yeah, it's been a good week. Since we always start off with this tradition. New one for me, Kiwi Guava. So again, not a sponsor. You're welcome to sponsor us, Celsius. What are you sipping, Tevis?
I have the tropical one.
Sorry, guys.
Of course, the bear doesn't have a Celsius for the Sofi Weekly.
Yeah.
Who's the parent company of Maxwell House? I think is it Kraft Heinz? I think it's Kraft Heinz. I think it's their end, or maybe it's Coca-Cola. I forget. Anyway, yeah. So, cheers to those shareholders, whatever stock it is. Okay. So let's jump into the news. All right. Enough people have come in. So, NBA is starting to kick off. All right. We're seeing the SoFi play-in tournament evolve, and there's been a lot of traction around this tournament. SoFi is plastered all over with the NBA posting advertisements onto their Twitter accounts saying, hey, sign up for SoFi. You can enter a chance to win their SoFi Zeros giveaway or whatever it's called exactly, and get a chance to win $10,000. We'll be doing giveaways every single week. Tevis very prominently pointed out that this may be working quite effectively. Take a look here, guys, and then I want your comments. First, Tevis, why did you post this?
Oh, yeah. I don't think we've ever hit 26 before. I think we've topped out in the low 30s, but I could be wrong on that.
Like ever? Or
to my knowledge.
No, during the Taylor Swift era, we got to 16.
Oh, did we?
Yeah.
Okay, well then, I mean, 26 is still, I mean, look, okay, these numbers fluctuate pretty wildly. I think Apple resets them like on a weekly basis. If you look right now, I actually have it open on my other tab. We're 30 right now as of this recording. So they fluctuate. I'm kind of curious. I wanted to do a screen grab of where we are right now and where we're going to be at the end of Sunday, and just trying to see, because there's like 6 basketball games from now until then. And SoFi's logo is going to be all over. So I would just wanted to see like whether there is any correlation. Obviously, it's not any scientific method at all, but just was mostly curious.
Sure. Roy?
Yeah, we'll get into predictions a little bit later, but this was a part of my membership predictions. It's just they've really been leveraging, I think, these partnerships, especially the NBA, very very well. A lot of minor partnerships too. We're seeing a lot more website traffic this quarter. That's the highest 3 quarters that we've ever seen on SoFi. These 3 months are all in this year, so it's just. And of course, we see the app rankings as well. I think it's going to lead to membership growth. It's not just people like going on SoFi's website. I mean, there's some of that, but and of course, Tanner, you're probably half of it, just going on to SoFi's website and checking things out. So
It's true. Yeah.
but no, I think I was when they announced the NBA partnership initially, I was like, yeah, it's nice, it's good. It's like, no, I think it's actually better than that. So we'll have to see. And that's really one of the two things that I'm most interested in seeing and finding out in quarter 1 is just to see that membership growth. Are they going to see a fantastic beat in what they've guided for? I think so, but like how much of one? Are we talking like Taylor Swift quarter level of beat? Maybe not, but no, if we're like at football level of beat, and the quarter I'm talking about, previous quarter 4, great. I'll gladly take that. So, but no, yeah, very excited by this partnership, and it's just like I'm seeing clips not related to SoFi at all. From SoFi people rather, just NBA stuff with SoFi in it. I'm like, that is good, that is cool, and it matches well. It seems like it's a different demographic than what they've maybe reached with Taylor Swift and the NFL. So smart.
Did you say that you are considering part of this NBA deal is a part of your Q1 prediction numbers? Or sorry.
Yes.
Yeah, it won't fall in Q1. I mean, look, I am accounting for the NBA deal to affect members in Q1, but the NBA deal was signed on February 14th. So like halfway through the quarter, and it didn't ramp up until like the beginning of this week with the play-in tournament. There were games, there was advertisement, but there was the All-Star weekend, but there was nothing sort of major. I think the bulk of that is going to reflect in Q2. For the last 3 weeks, the quarter has been closed, and as a result, those members they count into the next quarter.
Yeah, I realize it's not full quarter thing, but there is some impetus there. It's not that we're going to see absolutely nothing for the NBA deal. Plus, they have other smaller partnerships. Something's been generating the clicks, and I don't know that it's the Wyndham, not the mortgage company, and not the hotel chain partnership that they have.
Clark.
Yeah.
Yeah. Yeah. I mean, I didn't factor it into my Q1 numbers, but it was announced in Q1, right? There was an initial push in Q1. It's just really the main games and stuff like this is in Q2, the sort of SoFi play-in tournament, which is seeing more traction to their name than the usual part. But yeah, this goes way beyond just this one tournament, right? This is a full-on partnership. We're the official banking partner of the NBA, right?
Yeah. And their marketing is like, just even if it's not the NBA stuff, it has just been on point, especially the last 6 months. I don't remember there being any announcement of major changes there as far as who they were using, but kudos. If that person's watching it, just pass that on. Like, really, I follow companies that don't do this half as well, so keep it up.
Just the volume of how much the NBA has been promoting this is fantastic to see in terms of all of their social media handles. They have the hashtag in their account description. They're doing play-by-plays of all of the games with the SoFi hashtag. And it's just from an impressions perspective, it's absolutely insane to see how much the NBA is pushing it.
There is a tribunal taking place in my chat right now, whether to ban not a lurker. Put one in the chat if we should ban lurker, and then you're we got a couple twos. We got
I want them banned and put on Tevis's channel, so I put one.
There you
Tevis go.
One. Did you guys see this Forbes article talking about the top banks in the United States.
Mm-hmm.
Yeah, that was big.
Let's go through this for a second, because I have the full list here, and just let you guys see this. Number 1, USAA. Number 2, Capital One, Gate City Bank, all the way down till number 5, SoFi Technologies. All right. You can see as they continue to go down the list, some of the other names on that list. You're going to have to keep scrolling for a while before you see Robinhood or anything like that, because it's not a bank.
Well, you're going to have to keep scrolling until you see any of the big 4 banks. JP Morgan's not on there. I mean, not for a while.
Well, it's based on customer satisfaction. That's why.
Exactly. So I think if you go back to the actual article, Tanner, they have a paragraph where they describe the methodology by which they gathered these results. If I remember correctly, they surveyed about 49,000 people across 33 different countries, and they asked them basically to rank their satisfaction across 5 different vectors. I can't remember what all the vectors are right now, but of banks that they're either a part of, that they've been a part of over the past 3 years, or that friends and family have sort of, been a part of just in their circle. It makes sense for SoFi to be higher up in the US list, because they wouldn't even be aware of SoFi outside of the US. And it's purely based on satisfaction. So you're going to find a massive discrepancy here between SoFi's ranking and the actual, list of banks by deposits.
Sure.
Large banks have a less, well thought out product from user experience perspective relative to SoFi. Still amazing list. Yeah.
Can I highlight something really quick about this list that I thought was interesting? Roy, this might interest you more than Tevis, but just really quick, if I just go to Brazil, where's Brazil here?
Nubank.
Number 1,
yeah.
Nubank. All right. And then if we just go to Mexico, I don't know. We'll just take a look real quick. Number 1, Nubank. Huh?
I mean, so on that, and this is SoFi Weekly. I'm likely to be switching jobs here in May. I'll have access to funds that I didn't have access to for personal investing, just because I've worked at this other place for a while. That's been adding up. That's been multiplying. I'll be buying Nubank with not exclusively. I'll be adding to SoFi. I'll be adding basically to all my positions, but I will initiate Nubank at that point. And love the price action on Nubank. If it goes down to 5.3, like, just keep falling. Go down to a penny, please. Just the lower it can possibly get. So keep shorting it, please, Tevis, and I appreciate it. I'm just kidding.
Yeah, Tevis is a known shorter.
I would happily buy a Nubank. I just need to stop buying SoFi and Tesla and Celsius, and then sure. If I had money, I'd buy Nubank too.
If Tesla and SoFi are where they're at right now in May, I will buy those names heavily. Palantir a little bit too. It's getting to the point where, for me, it's reasonable. It's not cheap, but it's reasonable.
Isn't it like $22 a share?
Yeah, it's just over 20. It'll probably. I always thought it would retest 20. And I didn't figure it'd take 3 months. So, but we'll see. Like, earnings are coming up for all these things, and SoFi is actually. It's been interesting. I know we mostly talk about the company, but the stock seems like it did most of its bleeding, during this, especially the senior convertible note and before, and since then, especially relative to its fintech peers, it's been holding pretty well. It's touched below 7 a couple of times, but for the most part, if I look at and I pull up its peers, it's holding fairly steady. So that's I have a large position. I'm happy if it goes either way. And maybe we'll talk about that, what we think for earnings at the end of today.
Yeah, I'm excited for that. And Tevis, I hope that you looked into it a little bit, because I want your opinions. I'm going to put your feet to the fire whenever it comes to earnings predictions at the end of the episode.
All right, can we be honest with the audience? So Tanner did his earnings predictions video this week. I've been absolutely swamped with work.
Should I put the link in the chat? That way they know where to go to watch my.
If you do, I'm sure they've seen it. And so basically, when we were talking about this episode earlier today, he was saying, okay, earnings predictions episode, because he's going to be in Jamaica next week, and he can't make it next week. Now, Roy and I were planning to do earnings predictions next week, as that's the SoFi Weekly immediately prior to the actual earnings. And then Tanner basically said, I've done my homework, guys, and I'm going to be expecting earnings predictions. And now he's saying all of this stuff. So I'm probably going to have my earnings prediction. If I find some time on the weekend, I'll do a video on them. This is just me. I've had about a couple hours earlier tonight to think about it, just in anticipation of this.
Perfect.
Weekly.
We can continue.
Yeah. We were made known this like at 3 p.m. is like, yeah, I've got yard work I got to do. We got to garage sell, all that stuff. But no, I've done some homework. And so Tevis, you're welcome. Like for what I've done, just use that because it's absolutely right and spot on and well thought out. If I may say so myself.
Actually, mine is pretty easy. Like whatever Tanner says, I add 15 to 20% premium on top of that, and that's my prediction.
Because he's bearish.
Just generally too bearish. Yeah, exactly.
Yes, I mean, like he's a SoFi bear. That's why he has so much of it.
Hey, that's why whenever earnings come, and then there's some things that you guys don't like, and you're like, oh, bad earnings. And then I'm like, holy crap, it beat my estimates. I'm the one setting myself up to beat always. Okay.
You must be the guy that when you're going to a party, you're like, man, this is going to be really lousy. I'm going to hate this. I hate these people. And you go and you're like, yeah, it was okay. This is awesome.
I hate these people. Yeah, I mean, maybe to some extent. Galileo had some fun news this week. A new client announced. Rapid Finance taps SoFi and Galileo to enable small business financing. Did you guys see this?
Yeah.
What am I saying? Of course you did. Sorry, go ahead. I'm going to read the first line, though. Or should I read the first line?
Yeah, do it.
Okay. Rapid Finance, a small business banking platform helping small businesses find customized financial solutions in collaboration with Galileo Financial Technologies, today announced the launch of Rapid Access MasterCard. The Rapid Finance's MasterCard program is the first program sponsored by SoFi Bank and managed by Galileo, giving small businesses customers quick and flexible access to their funds when they need it most. I'm just going to read 2 more sentences here to help understand. Rapid Finance's SMB customers with a line of credit in good standing can seamlessly and instantly access their funds to maintain their operations. That's through the card. Okay, so as you're spending, it's actually coming out of your line of credit. Then I want to just read the end part here. The Rapid Finance prepaid MasterCard is issued by SoFi Bank. The Rapid Finance line of credit is not a SoFi Bank product or service, and all loans are funded and originated by Rapid Finance and are not affiliated with SoFi Bank. Just so everyone understands the partnership here, this is a card issuing partnership on SoFi Bank, the first of its kind. Very, very exciting. It wasn't even too long ago that SoFi transferred over their own debit cards and credit cards over to their own platform as well.
Yeah, and I think this is the playbook. I mean, the thing that made me excited about this is exactly what you mentioned. Like, this is a collaboration between the banking side of the business and the technology side of the business. And here we see a playbook that we can extrapolate forward for future partnerships to understand that relationship of how SoFi can profit off of these partnerships at multiple layers. You have something powered by Galileo and then leveraging SoFi Bank. The other thing is, Rapid is a sister company of Rocket Mortgage. And so I was mentioning in a video that I did earlier today that, I like speculation. I think it can open the door for future partnerships of a much larger size in that space. And so, I took it to mean good things, but I definitely think the headline was that collaboration between the banking side and the Galileo side, because the type of partnership before, I mean, them offering that card and having access to SME funds, they've done that type of partnership before. Galileo has done a couple of those now. And so the only unique factor here was the fact that it's leveraging SoFi Bank as well.
Roy?
It's small, so don't expect a lot of revenue, but from small beginnings come great things.
Well said. Yeah, no, they're not a big company, but it does show that AWS of fintech is rolling out. It's very exciting. What else was in the news for SoFi this week that you guys want to cover before we jump into some predictions, or just prediction conversation?
Predictions.
All right. Let me bring up my spreadsheet really quick, or just so then I can take a look. I had predicted both products and for what's it called? Members and such. This next quarter, I'm saying about 610,000 new users. What did you guys say for members, or what are you thinking around members for SoFi's quarter?
Yeah, let me pull that up real quick. I've got two X posts. I was doing my homework. If you want to chime in just your thoughts, Tevis, and then I'll
Yeah, I
jump
can
in.
go. I sort of wrote up, I mean, just in thinking about this, I was also just prepping for the video that I want to record later. So I wrote up the rationale. I'll just do a very brief spark notes and then dive more into it tomorrow.
Sure.
I put 635, and the reason for 635, I put a little boost on the MBA side of the business. That partnership halfway through the quarter, I think all of the other benefits around, referral bonuses and the credit card benefits and Wyndham Clark, like all of that stuff falls in Q2, and as well as the play-in tournament. My number is going to be much higher for Q2, most likely, just because of these initiatives ramping up. But because it hit halfway through the quarter, I generally put a little bit higher, given that 583, I think, was a number, something to that effect. You have to understand that there's usually a dip in Q1 relative to Q4. And so I was just looking at that trend, and the only number that was outside of that trend was Q3 of 2023, which was 717, I think, if I'm not mistaken. And then Q4 it dipped again to 583, and so this quarter normally you would expect lower than 583, but I still think we're going to have that compounding through that flywheel. And then I also added a tiny little premium to the MBA side as well from an awareness perspective. But I'm going to dive more in depth, tomorrow on this and just all the other numbers as well.
Roy?
I'm a little bit more bullish on it. I realize that these partnerships that they've leveraged don't all fully hit in quarter one. We'll really see that, I think, ramp in quarter two. But based on the website traffic, based on the app's popularity, based on some of the partnerships and that I'm seeing, and then the higher for longer. That's the other thing is there's people that, probably thought, federal government's going to be cutting anyway. So yeah, I could switch over to SoFi, but it's not going to. But they've been saying that for a while, and I'm one of those days, and I'm like, I just need to switch over. So myself and other people have been doing that, and I think that we're actually going to grow. Even though it's an aberration for a quarter one, I'll admit that fully. And if it falls under this, that's fine. But I think that we're going to see around 650,000 new members. So that's going to be 44% year over year growth.
Sorry, say that your number again. Sorry,
650,000. So
650?
we had 585 growth in quarter four, 717. That's Taylor Swift right there in quarter three. And quarter two was 584. And, as far as the growth, they've been in that 40s consistently. It may come on, I think it's plus or minus 50,000. So between 600 and 700,000. But no, I think that 650 there's a decent chance of it. It's optimistic, but I mean, they've continued to beat my expectations here time and time again. And this time I'm not underestimating them. Maybe I am.
Let's see what people say. I guarantee you Roy's going to win this poll, but I threw up a poll on my channel.
I guarantee you Roy wins that poll.
With all three of our picks. So I'll keep you posted on how that poll does. But, there's nothing really surprising if we jump into products for my end. I have noticed that the 1.5 ratio has been a little bit softer in recent quarters. It's been falling. And so I basically just multiplied my number by 1.5 and then reduced some off the top. So I came at 935,000 new product additions. Obviously, this would put them over 10 million product threshold, which is like regardless of what our estimates are, they're going to cross that threshold, unless they're like something drastically goes wrong. But
Sure.
I think that if we jump into the segment specifically, I think lending. I've been saying this since.
Don't go there yet.
No, I meant from a products perspective. But okay.
Well, I just wanted to hear Roy, and then I wanted to talk on the members per products thing.
Okay.
So one of the things that, as I was researching this, I was looking back just to see, what Noto had said as far as member count and see if there's something more recent that I forgot about. And I was reminded of a quote back in May that he said. And so he said, we've been adding about 400,000 members per quarter. This is last May, so not quite a year ago. I expect that number to grow. And I think by 2024, 2025, instead of adding 400,000 members a quarter, we could be adding double that, maybe even close to 1 million. If we don't see, 650 quarter one, fine, 500,000, 550, that's okay. With the partnerships that they have in play, and this NBA one, like it's doing really good things. There are some seasonal effects as far as SoFi Stadium, concerts, football, certainly. And of course, it seems like there's some seasonal as far as when people are willing to change over from banks. I think that they'll do really well in quarter one, but if they don't, I still think that they're well on track for that. Where it to the point where I think that there's a chance this year, and we're not talking about quarter one, but this year that they see that 1 million user growth in a quarter, member growth in a quarter, probably quarter four, maybe quarter three. I think we talked about this. We talked about our full year guidance. So they're doing phenomenal. They're doing the right things. 650, it's just a number. We'll see, but everything just seems like it's lining up well, and they're leveraging things well. So, we'll see. And I just want to add one more thing. Noto usually guides very conservatively, guys.
Mm-hmm.
Unless something just like a really, really far out goal.
Really?
He doesn't put a timetable on. No, like top 10 financial institution. It's a big goal, but he didn't put a timetable on it. When he puts timetables on something, and he's like 2024 or 2025. We'll see, maybe double 800,000 per quarter, up to 1 million. Like, just think for a second if he's actually being conservative, what that could mean for the company, what they're able to do.
He put a timetable for 2026, and that wasn't very conservative. 80 cents EPS. Like, what is that? Like over 100 million in net income.
We'll see how conservative that is or not. We don't know yet.
I guess.
We know his history. It's been very conservative.
But I think it's because we understand that about Noto that we all add a sort of premium onto, maybe except for Tanner, but even Tanner still goes above and beyond what the guidance is. And I think that should tell you all you need to know about SoFi sandbagging guidance when even Tanner is adding a premium to his picks, right? Like, if Steve were here, he'd be like, screw it, 700,000 new members, because he was always the most bullish in terms of that. But all of us go above SoFi's estimates.
It's funny that I'm labeled as this bear. I've been by far the most accurate person in these member predictions, aside from last quarter whenever Steve took the cake. And I'm labeled as this terrible. I just think that it might not always be the absolute best, right? Like, and then if it isn't, what side do you want to be on? Like, I saw some guy, we'll talk about EPS in a second, but his expectations for EPS this quarter was insanely high, in my opinion. And he said, if it doesn't happen, he's going to sell. I was like, dude, you're almost guaranteed going to sell.
What was the EPS?
On one of your fintech frenzies, he was like, "Oh, 2 cents, or I'm going to sell." I didn't take that as it seriously, but I don't know, man.
He said 2 cents was his EPS prediction, and that's not unreasonable.
It's not unreasonable, but to sell if it's not 2 cents is the unreasonable part.
Depending on, it's like 3 to 4 times their guidance.
That's like 40 million plus.
When you're talking about like EPS guidance, like for cents, like the
he's in the top champion of excuses.
But no,
Oh.
I mean, my EPS got. I'm thinking we might hit 2.5 cents. So it's like it's more than they've guided for, yes. But I mean, like, and we need to. By the way, before we end today, we need to look at analyst expectations. Just as a reminder for
3
folks, like,
cents. Watch and see.
Tanner tends to be a little bit more conservative here, but the company itself, Sofi, is guided very conservatively. And if you look at analyst expectations,
Oh, it's
not
wrong.
only are they expecting, oh yeah, Anthony Dodo and company, they're going to just, hit. No, they're expecting much worse than that. Like the smallest of small margins of profitability. It's astounding, personally.
Yeah, hold on. Let me pull it up. I have it right here. This is ridiculous. I want to show it to you guys. All right. 0.0058. This is not the amount of Bitcoin you're holding. This is actually the analyst estimates for Q1. And then Q2, it's still 0.0119. So basically, analysts are saying this company is going to come absolutely flat. They're going to be positive, but it's going to be absolutely flat for this upcoming quarter. And even Q2 is going to be 1 cent EPS.
What is that from
This is
in
investing
net income? What is that, like 2 million?
Yeah, it's basically flat.
Okay.
So
I would be
this is
concerned if they were right.
Well, I mean, just
possible.
look at this trend, guys.
Yeah.
It's like I'm not surprised why people are adding, 2 cents or 3 cents or 4 cents on top, because every single quarter, 2 cent variance, 4 cent variance, 3 cent, 1 cent, 5 cents, 2 cents, And so if you have zero, what every retail investor is looking at is saying, okay, 2 cents or 3 cents, just going off of the trend, right? So,
Yeah. I mean, people are acting like all their business is just going to go straight to the bottom line, in my opinion. Some people's guides are higher for net income. What I'm hearing in the chat is like higher than what they're saying is going to happen in EBITDA. Are they not still going to, have stock-based compensation? Are they not pouring a ton of money into sales and marketing? Are they
so
not doing those things?
I think one of the key differences, Tanner, is that people see, a number and then they just gut impulse say, whatever the net income number is, whereas you deduce your net income number from going from the top line to the operating expenses to the SBC to, everything all the way down, and then you get like a scientific method of getting to the net income. People see, okay, they did, 40, they're going to do 60. Without really realizing the contributing factors that make up that net income. Like, for example, I mean, I said this on your FinTech Frenzy, and it's also going to be in my predictions video tomorrow. I think stock-based compensation is going to be higher on an aggregate number, probably lower as a percentage, still keeping with that trend, but probably higher on an aggregate number, simply because they had Arun Pinto join as their chief risk officer. Aaron Webster left the company. They've had a number of executives joining. They had the new board of directors member who joined from the New York Fed, one of those. I can't remember, Dana Green. And they also had the director of engineering that Roy talked about. So they've had a couple of some pretty senior people. Those people have SBC costs as well. So SBC, I think, will be definitely higher. That's going to contribute to the bottom line as well.
You were talking earlier about products per member. This has been going down. So they say that they're sort of guiding for that 1.5 times, meaning that, say, for every 2 members, there's 3 products outstanding. 1 checking account, 1 relay account, 1 personal loan, something along these lines. That's what equals a product. Now, in the last couple of quarters, this hasn't been large fluctuations because we're in the tens of millions now for products. So there'll be slow fluctuations as we return back to a median or change out of it. But we've been at 1.513 times products per member, then 1.507, 1.502, Then in the most recent quarter, real big drop off, 1.477.
Yeah.
Now, where do you guys see this going? Do you see that reverting back up or continuing its trajectory downward?
Up. The reason why I think it's fallen, when people join SoFi, it's typically one product at a time, and it takes time for that flywheel effect to really have full effect. If people are jumping on because of Relay, they'll be more open to a bank account in the future. Maybe they'll sign up for checking, and they'll be like, "Oh yeah, savings is a good idea, or invest." But it doesn't. Typically, you're not on, and you're like, I'm going to sign up for 5 products right now. I've joined, as an example, Relay officially, and I'll be opening up a bank account here within the next month. So a checking account. But no, that's very common, and we had a massive glut of people join in quarter 3 and also quarter 4 relative to the size of the company. So it'll take time for those to be digested, but it's kind of like a snake that eats a big rat, and that rat is just being slowly digested. The customers are not rats, but hopefully you get me.
I think it'll stay stable for some time, because you have to understand that, and I'm really curious to go one level deeper, and they don't report on this necessarily, but to go one level deeper and actually see the combinations of products that are commonly found for users.
You guys call
Because-
me the bear. Eh? Sorry, go ahead.
If you look at the aggregate numbers of where we're getting most of our members, it's all in financial services,
Mhm.
right? And then you look at the benefits that SoFi is now providing. I could totally see people, switching their direct deposit to cash in on that benefit, getting the referral bonus. Now with the credit card benefits being where they are, getting that as well. And so the more that they incentivize financial services, I think the better it's going to be for that cross-pollination of different products, because financial services has the lowest barrier to entry for flywheel effect for the products, right? Lending, I don't see people rushing to get a personal loan with interest rates so high. So financial services is just going to be the easy low-hanging fruit from a cross-pollination of products per member perspective.
Roy, anything on that?
No, I mean, I already said it. I think that it'll just take time as they continue to improve products, and as people get used to the SoFi ecosystem. They do a good job of cross-selling and making offers. They've done that with me as well, short time with Relay. And no, I think it'll just take time. But I have no real concerns. I don't see it's an important measure because SoFi says it's important. I understand, just you want to see the flywheel play out. It's part of the thesis, but it's one of those where I'm like, I don't really care where it's at necessarily today. As they continue to accelerate member growth, if that dips down to like 1.3, I'm not bearish. I'm just realizing like, hey, they brought on a huge amount of new members. Like if they won't do this, but if they do like 1 million this quarter and that falls to 1.3, I'm dancing. I'm not like, oh man, I should sell the stock because it's 1.3. So not the most important number right now.
Yeah, no, I agree with you. I just think that lending products, in my opinion, may start to slow throughout 2024. When that happens, there's going to be a much larger representation of financial services products as they push that. And exactly what Tevis said, there's a much easier way for the people who come in for a checking account to get Relay, to get a credit card. If you had met SoFi with the idea that they were going to like potentially you found them on NerdWallet or Credit Karma or something like this as just being the cheapest personal loan for you possible based on your credit card and FICO score, you may have had no intention of cross-selling at all, right? You're there to pay off your loan and then you'll be gone. That was a lot of their members for student loans.
Yeah, I know you tried to rush through that last point, but I caught it and I'm going to clip it, and it's going to be in my video tomorrow. Just exactly what Tevis said.
Okay.
This is my prediction.
I was like, what are you talking about?
Go ahead, Roy. Sorry.
No.
Yeah. No, definitely.
Are we ready to talk? Like the other thing that I'm really interested in, like number of products per member, like it's going to be probably just slightly under 1.5, but I'll just say 1.5. Even though I think it'll be slightly lower just because of membership growth. But The lending segment is the other one that I'm very, very interested and curious about because SoFi guided for 90 to 95% over 2024. So slower growth, of course, with some very bearish macro assumptions. Some as far as the rate cuts are proving true, but the economy seems like it's more robust so far. We're higher for longer for sure. And they've alleviated some of the capital constraint concerns that some had, mostly bears. And so I'm just kind of curious when that deal happened, the senior convertible notes, it wasn't like 3 days before they're like, hey, let's do this. And then they did it. They knew months in advance that, hey, this is probably where we're going to go. And based on those assumptions, as they're finalizing deals and preparing for that announcement, I'm very curious if they took that opportunity to say, okay, we can be a little bit more aggressive here this quarter 1, given what we know and where we're headed as a business. And also if their members continue to grow and deposits keep going up, than they were expecting. And so I'm anticipating if we're ready. Well, I can give my prediction, but if not, prediction or
Yeah. Are you talking purely for the
just
revenue side?
just lending as far as originations, and I also have a net revenue prediction as well. So I'll do
Just
this.
anecdotally, I kind of have the opposite take. I think that they're going to be a little bit more conservative in Q1, and I think we've been seeing from the news that they've been somewhat more conservative in Q1. Yes, they've had, partnerships that just came to fruition in Q1 that they've been working on behind the scenes for a while, but really Q1, Wall Street is looking for that continuity of profitability to gain confidence going forward. They don't want to do anything to jeopardize that. Q2 is when I'm seeing a lot of even something as small as the credit card benefits, the referral benefits, them jacking up some of the bonuses that people get. That's really when I think they're going to let loose with the member additions, try to maximize on that front. But Q1 is really that transitory period where they have to still be a little bit more fiscally conservative to make sure that they can have that follow through on the bottom line and do so in a way that beats Wall Street expectations so that Wall Street can guide upwards and so that they as a company can also guide upwards, especially when you consider some of the changes in the macro assumptions that they had built into their business. You have to keep in mind that SoFi had multiple rate cuts. We're not going to get that situation. It's much more bearish than it was in January from a rate cut perspective. And so I think that so many things have happened over the last 3 months that I think, especially considering the SoFi management team naturally being more conservative, that they would have focused more on the profitability side of the pendulum as opposed to the members side. And as more quarters go by and they keep compounding on all 3 of their business segments being sustainably profitable and the margins increasing on Galileo, so on and so forth, that then they can actually let loose a little bit more with their S&M spend.
Sure. Roy, can I bring up your screen here?
Yeah, go for it. So this is my origination prediction. I think student loans will keep being soft this quarter and next quarter as well. We'll see acceleration on that in Q3 and a lot in Q4.
Is that just a little over 4.5 billion there?
Mm-hmm.
Okay.
And personal loans, I do think that we'll actually see a little bit of acceleration there, and home as well. Home is partly, I think that they want to grow that product a bit from just what they've said about it, and they have a partnership with a guy named Wyndham. So I mean, like, come on. I know that wasn't in Q3, but no, realistically, like home lending is very seasonal, and it's at a very attractive interest rate. I think right now, I highly doubt that rates are going to be raised, and I think that they probably saw that there's some opportunity between what they're able to do with the capital constraints, with the macro, and then so overall, as far as my predictions, I saw rather than them decreasing this, that they had room to grow about 2 to 2.5% from Q4, which that doesn't sound particularly exciting. But when they were talking about 90 to 95% over the 2024 for lending, it's decent. It's no quarter three. Like they can't really do that. Tevis is right. They have to be a little bit conservative, and they tend to be. But that would put my estimations for net revenue was about 355 million for lending. That's one of the reasons why I put the 2.5 cents in for EPS. So
I like some of what you're saying here. I think that you're pretty hot on personal loans, in my opinion. I don't think that it'll be an acceleration. If anything, it'll probably, this is just my opinion, stay flat or potentially decline. Nothing below 3 billion, but yeah, I think they're going to play it closer to the chest. Defaults are seemingly rising and quickly, but
not universally. Like you're seeing the defaults, at least from what I did not look at every major bank, but commercial real estate, they thankfully have no exposure to that. Like Citibank, I don't know what they were doing, but
you don't even need to look farther than what's happening at SoFi.
Pardon?
Like at SoFi, they're rising.
Commercial real estate?
No. Sorry, not. I didn't catch the commercial part. I was stating the default rates on their personal loans.
Yeah. No, they're rising. They guided for it to rise. It seems like, that's for sure happening. But I think that the main cause for conservatism was partly that in quarter four, but they really, really wanted to hit that EPS. And I think that as the other segments continue to grow and improve and bring that profitability, that they have a little bit more room to not be super aggressive like they were in quarter three, but certainly a little bit more than quarter four. So yes, default rates are there, but they've guided for that. They've built out provisions for that. So they're not. Is it Bank of America? Yeah, Bank of America. Like, my goodness, that's a poorly run bank. They're coming for their lunch. No, like the commercial, like I looked at the top line numbers, like, yeah, it's fine. And then somebody had linked like the commercial real estate and what was happening and the provisions that they didn't make, like the assumptions, like, did somebody just like go on vacation for like several quarters and just say forget? Like, I don't know.
It definitely wasn't the fortress style that JP Morgan has sort of not modernized, but popularized. But if they get it right, they'll be rich. It's just a matter of they're not playing it very conservative.
Yeah, and I do think it seems like they took away the incentive, I believe, for I think one of you guys mentioned that for credit cards referrals, or at least they reduced it. They changed something about it, so
SoFi took them away.
It seemed like that they were trying to de-emphasize that product, which it's not successful yet for them. I think that if that product like kind of wasn't used at all this quarter, they'd be fine with that. So there's some conservatism there. They're not like, but every single what I'm saying is every single segment of the lending is not universally at risk. There are some where you're certainly seeing those default rates accelerate, some which SoFi is not exposed to at all, and some which it seems like they're trying to limit their exposure to the credit cards. But it's not universal, and it also depends on the bank. Some banks are a lot more successful than Bank of America.
Tevis, any comments on originations or their lending platform?
No, I didn't get there in time before this video, so I have no thoughts. I'm sure I will by tomorrow, but I have no thoughts currently on originations.
Do you have a gut feel? Like, are you thinking? Well, you said it that they're going to be conservative, so that's good enough.
I said they're going to be conservative, absolutely, from a revenue and bottom line perspective. I think that lending overall, and I mean, I've said this since the last earnings report when they put out the guidance and they said lending is going to come in negative for the year. Especially in a higher for longer environment, I don't think lending is going to be as soft as they think it is, or as they guided for. It's probably going to be up single digits is my estimate. I haven't looked into how that translates into an originations perspective for Q1 just yet, but that's my overall sort of thoughts around that.
It's the biggest question I have about SoFi right now. Aside from maybe just new Galileo ads, that's really hard to predict. But what's happening with their risk-based capital ratios is really weird to me. It's all over the map. So essentially, SoFi at the end of, was it Q3 of 2023? They had about 14.5% risk-based capital ratio, or RBC. And so they're not allowed to go below 10.5% from a regulatory standpoint. You don't even really want to be anywhere near it, just in case, there'll be natural fluctuation. So you don't want to kind of be anywhere near it in case defaults start to rise, something like this. So let's say 12.5% is their absolute bottom. Now, what they started clearing that up in Q4, tangible book value grew quite a lot. So they got up to 15.3%. Then the convertible note came in, that'll be 17.3%. So they're now way above. They've got this huge buffer, okay? Starting to look like Lending Club out here. And now, what?
Don't say that.
No, but it's...
Don't mention their name.
And now it's like, okay, are they going to continue to... Because supposedly they sold a ton of loans, maybe around 1.1 billion is what I'm seeing based on their forward flow agreement of about 500 million, and then ABS deals that people said were around 650 million, if I have my sources correct.
There were 3 pieces of news in quarter around loan sales. There's the forward flow agreement, and then there were 2 ABS deals.
Yeah.
One was by JPM, I think. I can't remember. They're both in quarter, though, so got to keep that in mind.
Yeah. And so it was like right around, it might even be more than 1.1 billion, but I think that's the amount that people have said that like we have, receipts. So lots of selling. What are the marks on those sales? I don't know. That could impact the stock and greatly, by the way.
Yes.
That's what the analysts are looking for. We're looking for members and products. They're looking for what are the fair value marks on the loans. So anyway, so they said by the end of the year, they want to get that ratio back to 14%. I'm looking over at the chat. Okay. Are you laughing at Fun Stuff's comment?
Yeah. Just
Okay.
so out of the blue.
He said, is that Jeffrey Dahmer?
I was like, who is that addressed to? And then I looked at Tanner and was like,
Definitely me.
oh, that's definitely Tanner.
Yeah, I got the stash. I've been hearing it a lot. No, not anywhere other than this YouTube chat.
Oh,
Only whenever Tevis is around.
sorry. Sorry to mess up your flow.
No. I like to have a good time. Sit
Like
down.
Jeffrey Dahmer.
Okay. But they said by the end of the year, they want to get back to 14%. Yet they're selling a ton of loans. Repayment makes up for a large percentage. I think 1/6 of the outstanding principal gets paid every single quarter. It's an outstanding amount. That's like another, what is it? Almost $3 billion, or no, $2 billion, something like this. So I don't know. It's very hard to try to project what's going to happen for originations. And then, yeah.
Can you throw my screen up?
I don't think I want to.
Somebody said Tanner is too friendly to be a serial killer. And I'm like, I don't know about that. Oh, come on.
I mean,
what do you mean I don't know?
Look at that resemblance.
I call you a friend, Tevis.
What do you mean?
I don't know. Based on everything you know, you think I'm a serial killer?
No, I'm just saying, like, you can't make the statement to say he looks too nice to be a serial killer. Like, read up on serial killers. They're all like the nicest appearing people.
I don't know if that's true. I don't think Jeffrey Dahmer was a very nice appearing person.
And good neighbors, other than the whole murdering people thing.
Yeah.
Other than that, nice lawn and friendly. We actually, so growing up in Alaska, we kind of lived outside of town. It was a small town anyway, and we shared like a 40-acre settlement area with 2 other neighbors. And across the road, like I think our 3rd nearest neighbor, they were murdered when I was growing up. And I don't know. Like I was freaked out and creeped out like the whole time. It's just like you never know. Like I don't know that they ever caught that person, and it was one of those things where I was like, usually parents are careful what they say to their kids because nightmares is like, I don't know what my parents were doing, but they were not careful. They're like, oh yeah, so and so sell that house is selling, and why? Oh, because they got murdered. It's like, what?
It's weird.
So, but I'm sure it was by like the nicest possible neighbor, other than them being a murderer. So.
Yeah, this took a left turn.
Danny's been very spicy today. I'm seeing all his comments, him calling us amateurs and all this stuff. I'm letting it slide, Danny.
Roy, I'm worried these two may affect your image.
I mean, I'm already tarnished, honestly. Like, so where I got my master's degree from, it was in Memphis, Tennessee. Moved there from Alaska, and there's always nicknames. My nickname there was Canadian Roy. So, and I told him, I was like, hey, calling a Alaskan a Canadian is like calling a Texan, which I am now, a Mexican. You don't do that. Yeah, Canadian Roy. So I fit right in with you guys. I'm ruined.
Yeah.
Just like your economy and your
I feel like
currency.
the more Roy hangs out with me, the more critical statements he has to make about Canada. I've been noticing that over the past several weeks in Bootleg Weeklies. Last time in Bootleg Weekly, he told his like Canadian nickel story about when he was like mowing lawns, and today we have this. It's just
scarred for life because
every
we lived in proximity to the looming threat of Canada. Like, I mean,
mine and Roy's DMs are like exclusively X posts about how Canada's economy has gone down the drain. Like
just
chart, yeah. And we're just
it's true.
That's what feels good, I think.
No, I like just to make your day a little bit better, and bam.
Galileo clients. Anyone? Any expectations? I said 6 million, and I got to be real with you guys. I think that's pretty shy. I definitely could see 7 to 8 million. But I'll keep it at 6 million because part of my quarterly expectations are also like, I look at it from Q1 to Q4, and how does that fit in with my annual guidance? So part of the 6 million is because I do think that there will be acceleration throughout the year, and then I have higher expectations for the quarters to come. So I'm saying 6 million, keeping it at that.
Yeah, I have no read on that. I don't know, other than partnerships like Rapid, when there's a bit of an acceleration anyway, or like seeing how some of their partnerships are growing, how to read that, other than, just seeing what they guided for as far as the tech and lending platforms. A lot of that has to come from tech. And I don't think that they're solely banking on that massive bank to come through the pipeline. So I don't know. Like, how are you? Is it just a gut feel thing, or are you like, what are you looking at to kind of look at?
No new, partner signups. Like none.
Yeah, no.
We see a level of re-sign ups, or sorry, like existing members signing up people through Chime, through Robinhood, through all these different platforms. So I'm banking it as just a regular level set growth of 6 million and nothing really past that. And it could even be lower than that if potentially we've lost a client or something like this. I just haven't heard any news. And, the community is pretty good at finding that stuff. So
let me push back a little bit on that. I don't think logos is a telling signal of the volume for the accounts, simply because if we add up all of the logos that we possibly have confirmation on, I would venture to guess that it's probably like less than 20% of Galileo's total client base. The majority of them are not public. The majority of them have NDAs. The majority of them have, agreements in place that, they don't publicize those. So, it's like saying web traffic was really high. Yes, there's a portion of people that probably signed up, on the web, but it's not a great indicator because there's too much left to chance.
Yeah, I mean, we were able to find a couple of accounts just going through fintechs and looking at their user agreements and seeing that Galileo Technologies will have their information. I was looking like crazy this quarter. I didn't see one. And the ones that we did see from the quarter before were all in LATAM. So I was specifically even looking in that sort of general area, and I don't know. But who
So
knows?
I think I'll take the opposite side for Galileo, and and I don't have an exact number. Like I said, I haven't done my predictions yet, but thematically speaking, where I'm coming from is trying to work backwards from the first time they mentioned the POCs to, like, we're working with a large top 10, top 5, whatever bank, and working to say, okay, what's 12 to 18 months of that timeline to try to deduce when these POCs could be complete, with the assumption that when complete, that accounts would start migrating over and we would see bigger chunks of accounts moving. I think Q1, Q2, and I think I said this like as early as Q3 of last year, to say Q1 was my bet on when these POCs would wrap up. If we do see a POC wrap up, we can definitely have double digit millions in additions, like 13, 14, 15, 16. If we don't see a POC, and like you'll know immediately, like it'll be like a big addition. And then you can just say, oh, okay, well, if it were City or if it were, USB or whichever, you can very easily tell because of the volume of accounts. Otherwise, I think we could stay within that range, 7 million, 8 million. But I do think it's around that time, especially with the comments that Lapointe dropped about 3 months ago on the POCs being complete. The assumption there is that accounts will start moving over.
Roy, do you have anything to say on that, or can I comment?
I mean, they've been showing slow and steady growth, and I think that that's what we'll see, barring a massive loss of a client, which we'll know in a hurry. But the one thing is, we don't know for sure when or if, it's not a guarantee that this large client will move over, and I don't think this will come in the form of an announcement. I think it'll just show up in earnings, and people will be like, "Okay, awesome, SoFi will go up to, go up a whole bunch, and then it'll fall back some because that's what the stock does." But no, like for real, it will make the tech platform feel and seem a lot more legitimate. So I'm just expecting slow and steady growth over, and they had let's see, 145 million accounts on quarter four, an increase of about 9. So I don't know, somewhere between 5 and 10 increase.
Yeah, I mean,
No big deal.
I'm not expecting them to say, "Oh, we signed on with Citibank." Like that would break a whole bunch of rules that they probably have in place. But if they're at 145 and they come out this quarter and all of a sudden it's like 162, then you're like, "Okay, guys, let's read between the lines here. They obviously signed a huge account."
Yeah, but so I want to counter this. Who do you think that big account is?
Well, it's not only the account. Like, I know where you're trying to get to say, okay, let's say it's City. How many accounts do they have? Even if they moved everybody over, it wouldn't account for a huge, single quarter boost. It's the big account. Let's just
No, but
say,
like City has a Galileo competitor. So it's like Jiffy Lube going to Mr. Lube for their oil changes now. It's like, no. Like, I think that it is City, in my opinion, just because they have a history with Technisys back in the day, and there's not many top 5 banks in America to look at, and it's definitely not going to be JP Morgan or Bank of America, in my opinion. So
Yeah.
you got few, I think you're looking at Wells Fargo, City, and US Bank. So pick. Okay.
It could
But
be
that,
too.
but that being said, there's an existing relationship with Technisys with City. If
but
City comes over for Technisys, they would still call that a proof of concept, but yet it still wouldn't have a single account additive to Galileo's customer count.
you don't know that though. Like, you
Why?
don't know how many accounts are moved over in the proof of concept.
No, I'm saying Citi could be a full-on onboarded client, and
Already.
5 years later, 0 customers will be counted as Galileo customers because they're Technisys back-end platform only. I'm saying like they're buying a different product. They're not buying a card program. They're buying
That would be
risk.
reflected.
Sorry, go
Yeah,
ahead.
sure. Even if it's not reflected in the accounts, like it would be reflected in the revenue, it would be reflected in the
Mhm.
margins. So
Yeah, I hope it happens. But people are like, oh, there's going to be 20 million ads, like because of the big POC. I'm like, one, no one knows it's going to close this quarter, and two, it might not even be for that product.
yeah, look, I mean, I think first of all, I don't really care whether it's Citi or USB or Wells
Is Mr.
Fargo.
Lube just a Canadian thing?
Maybe.
Roy, do you know Mr. Lube?
Never
Okay,
heard of
maybe
it.
it is. Maybe it is.
I don't care which top 10 financial institution, which top 5 bank, whatever, as long as it's a new one that they're adding. I think everybody here and everybody watching, accounts is just a vanity metric that's a proxy for revenue, and that's somewhat flawed because we don't know the ratio or relationship between accounts and the revenue of those accounts.
Yes,
So
we do.
okay, what is it?
67 cents a quarter. Divide out the amount of accounts by the amount of revenue. You
That's
can
not
you can deduct that.
But
I know,
not
but
every account is equal.
exactly. That's not like a one-to-one thing. You can add a huge account. Like
Yes,
there's different tiers.
But here's the thing: is that if they add Technisys, it will be important because then the amount of revenue per customer will go up.
I know,
Right?
but
You have to defer some amount of information with the numbers that we have. So no, it's not perfect math, but we do kind of get to see how on a per customer basis they're growing in terms of revenue.
even like you even said it yourself, if Citi were signed up already with the Technisys product and then they got the Galileo product, then they would be essentially like a user leveraging 2 products in that suite. And so my point is, it gets a little bit more complicated on a contractual basis. You can't just divide the revenue or the accounts by the revenue and just get an aggregate. Like it won't be predictive going forward, because especially now that they've changed their strategy to chase larger deals, like you can see bigger swings in quarter to quarter because they're not going after like little guys where you can at least have more signal there.
It's true. It could go from 67 cents to 68 cents, but you should look at it. It is pretty freaking like it's not unchartable. It's kind of very steady.
Sure, but let me even give you your example right back at you. Let's just say Citi has, I don't know, 40 million accounts and they're already on Technisys. And now the proof of concept is validated and all those people go on to Galileo. It
They're
doesn't
not coming to get, they're not coming ever to Galileo, in my opinion.
Hold on. Let me just present the case, right? It's 67 cents. All of a sudden in this scenario, because they're Technisys and they're already accounted as accounts in that platform and they cross buy into another product within the same platform, accounts don't go up, but revenue just shoots up. And so your 67-cent ratio is blown out of the water because they're cross buying.
Yeah, no, 100%. But then that's why we look at it as a total. Like, no, like Chime or Current or one individual player that might end up increasing their products with Galileo or Technisys will increase the products per user rate, but that's why we track that. That's even why we look at financial services average revenue per user. Are we looking at every customer and saying, oh, this is not beneficial to look at it from a relay perspective or invest perspective? No, we look at it as a conglomerate. Like average revenue per user for financial services is 15.5.
Absolutely. We look at it as an aggregate because that's all the numbers that we have to play with. And so what are we going to do? We're going to multiply and divide those numbers like with each other as much as we possibly can to try to get some signal. The only point that I'm making is that'll only take you so far. It won't be as predictive as we'd love it to be. If let's say, Chris Hager was on here like a couple months ago asking for more Galileo details. You've asked for more. I've asked for more. It's if Galileo were to publish the breakdown of countries, the breakdown of, how the cross-selling works, so on and so forth, then we can get much more predictive because we can know the distribution of the size of the accounts. But right now, like even if Galileo were to have a 5% increase in accounts, but a 20% increase in revenue, we don't necessarily know which accounts contributed to that, which accounts cross-bought, so on and so forth. And so it's just difficult for us to deduce that.
Yeah. Yeah. I would just say that, any one single client that is larger or smaller would not fluctuate the masses as much as I think we would think. In terms of EBITDA, do you guys have any expectations for EBITDA? I think Sofi is guiding, if I remember correctly, $110 to $120 million for EBITDA, adjusted EBITDA.
Haven't gotten that far.
Okay.
Yeah, me neither. So we're at an hour and 10. Do we want to just do EPS and then stock price and then go to the after hours? I think those are the most sexy ones for the audience.
Sorry, wait, what's after EPS?
Just stock price, just the fun one.
Okay.
Roy can hit him with the $12 again and just start the new wave of Roy memes.
I did $23 million of net income. That's roughly about a cent of EPS on a dilutive basis. I think on a basic EPS, it's like a little over 2 cents.
Mm-hmm.
Roy?
2.5 cents, so slightly higher. I'm a lot more bullish, I think, on a couple of segments and maybe not as much on others. And as we didn't do stock price, so I'll stop there.
So net income, you're saying like what, 60 million?
I don't
55
I
million?
don't see where I put that calculation. I was working on that, but it'd take me a while to find it. I'm still doing work on that. So,
No problem.
Whatever that calculates to, we have more shares too, guys. So, like as far as the actual net revenue, just keep that in mind if you're doing your calculations. So,
Evis?
So I put my range as 1.5 to 2 cents EPS. I think that equates to about 30 to 40, 45 million in terms of net income. EBITDA margins, I was around 22 to 24 for the EBITDA margins, but I haven't done the actual numbers. This is just me sort of spitballing from just the prep for this episode. So 1.5, I think, is more realistic. I think they can definitely hit 2. It's within the realm of possibility. But that's sort of the range that I'm playing with. So middle of the pack.
So Tanner, Tevis, Roy.
yeah,
Gotcha. Same thing with members as well. Which, hey, honestly, I think is quite reasonable, right? The members are the indicator for the amount of revenue, in which more revenue, the more that we can save to the bottom line if we got them in at cheaper CAC or something like this. So I think that actually does line up pretty well. Any other price, stock price?
Yeah, let's end on that.
Yeah, I mean, I think it'll be very different. Like if Roy gets his numbers, my stock, like I think $9.50 end of day. If I get my numbers, I think $8, $7.80, $8.
Yeah, I think a lot of it also depends on where we close. This is usually why we do the predictions next Friday, because like it's the next market open that Sofi reports. The implied move is about 15%. Just looking at the options market and looking at previous earnings, implied move is 15 up or down. I wouldn't be surprised if it goes to 9. Above 9 range, and then maybe it fades back. Maybe it sticks to that range and forms a new base. I mean, Palantir, don't forget, shot from 8 to 15 second quarter after profitability.
Sure.
That confirmation of profitability is a big signal for Wall Street. But again, we're operating in a very precarious market. From a macro perspective, there's uncertainty out there, right? Like you can go to sleep, today, and tomorrow you can wake up and find out that somebody's bombed somebody and we're opening red on Monday. And it's just, there's so many unknown factors, especially with a week left in trading. But, I think that if it closes out, like let's say around 750, around that range, maybe 760 by the end of this week, then I think we can definitely hit 9 on a good earnings, a double beat and raise.
Roy?
I really want to say 11 again, just because it'd be fun, but I don't really believe that. I think that we are reporting in a very different environment, and with some of the early earnings reactions, it's kind of interesting to track that, where companies do perfectly fine. They've of course performed as far as stock prices, a little bit different than SoFi, and SoFi is a lot more heavily shorted. So there's going to be more volatility. I'm going to say 9, and I think 9 is being pretty optimistic, even given with what I expect as far as what they might deliver for earnings. If we see 11, like, they've done something incredible. And of course, shorts are probably covering as a result. And it may not hold there because we know SoFi, but I'm optimistically saying 9. I think there's a decent chance it's reasonable, but there's also a good chance that they report a very strong earnings and they get a muted reaction of like 750, $8, which is not particularly exciting. But I also think that you won't see the high pop and the drop as well. So we'll just have to see. It just depends on the temperature of the market at that point.
I want to add that, well, I guess, yeah, just in case that this is my last SoFi Weekly till the earnings, which I will be live for, but it just might not be that Friday that I'm live. But on Monday, the actual earnings, I'll be live. It'll be predicated on a couple of things, right? We have to be paying attention to the fair value of the loans, the marks that they sold those loans at. That'll be important to Wall Street, okay? The risk-based capital ratios. It's really what sucks about SoFi, or I mean, sucks for the stock. It's actually great for you and I, if we can potentially see it and Wall Street doesn't, is they're not simply paying attention to Galileo or financial services at all. And these sectors are growing even as a percentage of total revenue and as a total percentage of their overall profit, right? Their margins are very healthy as well. So in my opinion, Wall Street is not going to be paying attention at all. I don't care how good it is at all to those sectors, but it's important for us to pay attention to it because that could change the thesis. But it's all on lending. That's where Wall Street's going to be because that's where macro is. So Noto and Crystal Point need to be very clear, very concise about every word that they say because Wall Street picks them apart, especially because the 10Q is not released right after. And so there leaves uncertainty about some of those marks before they release it the 2 weeks after.
Yeah. No, I
after
it's a quarter where I think that they'll do well, but there's going to be segments, and I think this will always be true with SoFi, just because they are very diversified, that there's going to be segments where bears will see bearish things, and there may even be some bearish things in the earnings report. And so I think that'll make it so that the reaction be beyond just the macro, that the reaction is maybe not what we are typically expecting with the SoFi earnings.
There usually is some bearish things every quarter. Especially, guys, whenever we set our expectations so freaking high. Last quarter, I remember a lot of people being quite disappointed with the member ads. And they added 584,000. But because we hit that 700,000 range, everyone was saying 700. There were large creators saying 800,000 plus. And Anthony Noto and team can only dull your feelings for so long by saying, hey, guys, maybe we should chill.
Yeah, I was wrong on nearly everything else last time, but the student loans piece and the members, although it came in a little bit lower than I even expected, I actually kind of got those ones, but the rest I was terrible. So don't listen to me. I don't know what I'm talking about. These guys do. But, really when it comes down to it, anything can happen. But this is a company that executes and executes well. I'm very confident in the long-term direction, even if there's some disappointment.
But $11 was a lot of fun.
I would love, man, wouldn't it be awesome? Not just even from the money perspective, but if it hit freaking $11.
Yeah. $11, Roy,
$11. There we go. Clip that.
All right. Ladies and gentlemen, if you want to see the after hours, today is going to be another fun one. If you guys haven't been a member of the channel before, we are actually stockpiling a pretty large library of Tevis, Roy's, myself's thoughts, Steven has a couple of his own channel or his own episodes talking about his alternative investment strategies as well as gambling strategies. So make sure you guys check that out. If you want to join, you can click that join button. You have to be subscribed, but you can hit that join button. It's only $5 a month. And you can join a couple of guys and hear their dumb thoughts. Thank you so much for watching and supporting the channels. But until next time, guys, Roy,
Peace.
bye. It's bye for now.
Live long and